Good morning and welcome to today's market briefing. Let's start with a quick snapshot of Friday's close. The three major U.S. indices ended essentially flat, showing a pattern of shrinking volume and sideways consolidation. But if you look beneath the surface at after-hours futures and individual stock movements, you can see that risk appetite is quietly cooling. The Nasdaq closed near 26,517, while the S&P 500 and Dow Jones were also little changed. Interestingly, although Nasdaq futures were down 0.26% in pre-market trading, QQQ and Nvidia actually rose 1.46% and 2.13% respectively during regular trading hours. This tells us that capital isn't leaving the market, it's concentrating into AI computing hardware leaders. At the same time, crypto-related names came under significant pressure, with IBIT falling 2.39% and MSTR dropping more than 5%. The VIX volatility index remained low at 16.78, suggesting this is not a systemic panic but rather a structural rotation. The main capital flow is still within the tech sector, but it is moving from high-risk, high-beta names toward hardware leaders with more. Overall, we are seeing structural divergence. Tech leaders are outperforming the broader market, safe haven gold is flat, and crypto assets are weakening. Let's take a global view. During Asian trading on Friday, A shares showed mixed performance. The Shanghai Composite fell 0.43%, but the Chi-Next Index surged 2.05% and the Shenzhen Component Index rose 0.94%. Capital clearly favored growth in tech stocks. Moving into the U.S. session, the three major indices closed flat, but implied volatility was extremely low. After-hours futures edged lower, reflecting market caution over weekend geopolitical and policy risks. The inflection point today came at the sector level within U.S. stocks. AI leaders strengthened while crypto and some semiconductor equipment names weakened. The sentiment leader remains Nvidia, while the laggards are crypto-related names like MSTR and IBIT. Let's verify our previous forecasts. First, we correctly predicted the continued strength of A-share Chi-Next, with both the Shenzhen Component and Chi-Next indices posting gains. Second, we expected U.S. stocks to trade in a range, but after-hours data revealed a sharper-than-expected divergence within tech leaders, with Nvidia hitting new highs while crypto was sold off. Third, the biggest surprise was MSTR falling 5.14% while QQQ rose 1.46%, completely decoupling. AI-driven capital is not spilling over into crypto, instead, it is sucking liquidity out of the crypto market. Fourth, the market ignored the stable high level of the 10-year Treasury yield at 4.45%, as tech growth stocks did not come under pressure. Looking at the triple linkage, the dollar index DXY stands at 100.85, stable at a low level. The yuan weakened slightly but showed no signs of one-way depreciation pressure. A weak dollar is favorable for emerging markets and risk assets. U.S. tech leaders and A-share Chi-Next rallied together on Friday, indicating that global capital is increasing its preference for China's tech growth chain. The 10-year Treasury yield at 4.45% remained stable and did not pressure equities. The three factors show a weak dollar, stable treasuries, and strong tech stocks. This is the most favorable for a soft landing plus AI narrative. Now let's turn to capital flows and sector radar. The strongest direction is AI computing hardware, with a 65% probability. Weekend rumors about AI chip export restrictions actually reinforced the scarcity and pricing power of leaders like Nvidia in compliant markets, attracting concentrated buying. The second strongest direction is China growth tech, with a 60% probability. The domestic substitution narrative is strengthening, and a stable yuan is attracting foreign capital back. The weakest direction is crypto-related assets, with a 70% probability. The AI capital effect and regulatory tightening concerns are the main drivers. AI hardware continuity has been confirmed over 7 days, while China growth tech continuity remains to be confirmed. In terms of specific stocks, we are watching AI supply chain and semiconductor equipment names. Wolf Speed shows a pattern with a 62% probability over the next 1 to 3 trading days. Bloom Energy also appears with a 55% probability, driven by AI data center backup power demand. For positions, Sumitomo Electric is relatively resilient with a 58% probability, and Coherent is also relatively resilient with a 58% probability. Both have room for further upside. On the risk side, Poet Technologies shows downside risk dominance with a 65% probability, and we recommend exiting that position. For tomorrow's radar and verifiable predictions, we expect A-share Chinex to rise with a 60% probability, targeting the 4,300 level. Nvidia is expected to trade with a 62% probability, in the $210 to $215 range. The dollar index DXY is expected to decline with a 55% probability, testing 100.70. MSTR is expected to fall with a 63% probability, testing $105. In terms of strategy, our is to control positions and go long, focusing on AI computing leaders and A-share growth tech, while considering a relative value strategy of long Nvidia and short MSTR. Our confidence level is 0.70. If the Chinex index does not open significantly lower in the first 15 minutes, we can add positions. However, we should abandon if the DXY rebounds sharply above 101.5, if the VIX jumps above 18, if Powell's speech turns unexpectedly hawkish, or if the yuan depreciates more than 0.5% in a single day. Our probability assessment for tomorrow is 35% up, 40% sideways, and 25% down. Thank you for watching, and we will see you again tomorrow.